We believe it's very important to make sure that we communicate and share information with their investors. So we do that now on all of our other properties, and we'll continue that as we carry forward with the fund. And
we think everybody likes a monthly check coming to mailbox money. So that's I think it's always been a popular thing with our investors.
Hello, everyone, and welcome to the Road Less Traveled Show. I'm Frank Pishler, the Director of Investor Relations here at Park Capital Partners. And today we have a special topic that we're going to be going over, and we're going to actually take a different approach than we normally do. Today, I'll be serving as the host, and as the guest, we will be having Bill and Richard, and they will be telling you about some exciting new initiatives that are happening here at Park Capital Partners. So, Bill and Richard, welcome to your own show.
Thank you, Frank. Appreciate it.
Absolutely. Thank you, Frank.
So I guess the first thing we want to talk about is what is the topic, right? And I believe, if you don't mind me spilling the beans, it is the fact that Park Capital Partners is going to be starting their own investment fund. Is that right?
That's correct, Frank. Yeah, we're excited to announce today that Park Capital ValueAdd Fund. We're going to be launching that here. By the time this goes on air, we'll have the fund out and ready to move forward.
Well, that's exciting. So let me ask you a little bit about it, if you don't mind. So why are you creating the fund exactly?
Well, it seemed like the right time. We have a lot of, in the macroeconomic backdrop, there's a lot of inflation out there. We're going to have interest rates going up. We're definitely going to want something that people are, I think, be drawn to things that have hard assets, that cash flowing businesses from day one that can kind of peg and adjust for inflation. With rising prices, will be able to just the rents will rise and all that. So they'll keep up with inflation. So I think hard assets are where people are going to want to be to safeguard some of their money. And then buying a cash flowing business from day one is an optimal strategy to do that. There's a lot less risk than ground up development or heavy renovation. We're taking a good asset to begin with and just making it better.
Gotcha. So I'm guessing that people already know what Park Capital Partners does, but what is the purpose of the fund exactly? What assets are you putting into it?
Yes, yeah, exactly, Frank. So what we're going to do is buy our value add strategy. So we're looking for 100 to 300 unit properties somewhere in the Southeast major markets. And then we're going to have some kind of value add strategy where they're cash flowing, they're good assets to begin with. We're going to go in and do light value add. So maybe $10,000 per unit renovation, bring it up to a higher level and still slightly below the highest level. We don't want to set top tier in the market, but we want to bring it up to comps in the market. And then that's how we force appreciation. That's where the whole value add strategy comes from. We're not waiting just on organic growth, but we're actually forcing it by bringing it up to a modern product. And then we'll be able to charge the premium rents. That's what provides the returns for our investors.
So very similar to what you guys have always been doing, right? Using the same models, same idea, but just in a fund structure. So I guess the natural question that investors probably have is, why are we shifting from the traditional, one acquisition at a time type of structure to a fund structure?
Well, two things on that. One, we haven't totally shifted. We've done portfolio acquisitions before in the past. We've bought two properties in a portfolio before in Atlanta. We had great returns on it, beat expectations, and it offers instant diversification, right? You have two assets. If something would happen on one versus the other, all your eggs aren't in one basket, so to speak. So that's the same idea with the fund structure. We're going to put 3 to 4 assets in the fund, and we'll have a diversity over either geographic locations and then also single asset opportunities that way also.
That's great. And I think you probably also, part of this fund structure, as normal fund structures provide, is some kind of risk mitigation, right?
Absolutely. Yeah. And we'll model that out, I think, in our OM and on the PPM side of it. But basically, if you have 4 assets and 3 of them return where you want, one does better, one does less, it's going to average out to, much safer. If you happen to pick the one that underperformed, then there's that way you can mitigate the risk. You have a blended average of all the properties. We're gonna only ones we think will perform and match our underwriting standards, but no one knows the future and there's risk in every investment. So we're going to mitigate that by having a pooled group and assets for the fund. So the value of that, the benefit to it.
That's great. I think Park Capital Partners is always trying to, keep up with the times and risk mitigation right now, of course, seeing and what we're seeing in pretty much every aspect of the financial industry. Risk mitigation is on the top of everybody's list. So that's great. That's great news, and important to know that we're always trying to better ourselves. You mentioned the fund will be structured with 3 to 4 different assets. You said, perhaps you could refresh my memory. Did you say 100 to 300 units in each project?
Yeah, exactly. So the typical we'd look for, just in a general outline, is we look for between 100 and 300 unit properties, somewhere between $15 and $50 million total asset purchase price on each property. So that's what we're looking for, and that'll be typically 3 to 4 assets in the markets we're looking for, and then we're going to blend that over a 5 to 7 year hold. And the reason we don't have a specific date, as in December 31st, 2026, we have to unwind the fund, is we want to capitalize on the market, right? We don't want to, if it's an arbitrary date on the calendar and then market happens to be down that point, we don't want to have to sell at a reduced opportunity where we can ride it out, we can extend it another year back on the uptick and maximize shareholder value for everyone.
On the flip side of that coin, if somebody offered you 10 times what we paid for it 3 years down the road, I think you take a look at that, right?
Absolutely. Our goal is, number one is preserve investor capital, and number two, grow investor capital. So we those are our dual mandates, and we'll follow that. And like I said, we keep an active understanding of the market, right? We're constantly talking to brokers, other sellers, buyers. We constantly what's going on in the market. So if an opportunity to outsize gains exist, we'll capitalize on that as well.
And sorry, Frank, just want to add to that point real quickly. Again, around the watching the market and looking for the opportunity as it presents itself, that's exactly what we did on our 3 prior assets that we've already sold. We had planned a longer hold. The market presented a great opportunity for us to exit early, and we did fantastic for the investors, making them between 4% and 7% higher than was the plan. So we definitely, that's our job, is to watch the market and to really look for those opportunities to do the best thing for the investor.
Yep, absolutely.
I think that's what's going to make you guys excellent stewards of a fund in this type of format, because you guys have constantly been doing that. You're looking for acquisitions, but at the same time looking for profitability on the back end of the deal. So that's always important.
Right.
So again, I know you mentioned it briefly when we were just talking about kind of the 30,000 foot view of the fund, but what are the locations that you're looking for to purchase and acquire these different assets?
We're mainly focused on the Southeast, where, for obvious reasons, there's a lot of job growth, population growth, a lot of good drivers here that make this a great place to invest. And most of it are tax-friendly environments and business-friendly environments as well. So some of the markets we're in, Charlotte, Raleigh-Durham, Research Triangle area. We like Atlanta, Greenville, South Carolina, Orlando. So some of the Southeast, the major city centers are where we're looking to grow our portfolio.
Yeah, I think that's great. Again, it speaks to you guys, keeping up with the trends that are going to keep you guys in the market and with the ability to purchase these assets for these investors. I think that's great news too. So let's get a little bit into the fund nitty gritty. Everybody, I'm sure, as an investor, is saying those are great things. We'd love to hear about those, but what about distributions, and how often are they paid?
Yes, we pay our distributions on a monthly basis. So after we've closed on the first asset, we'll start that, and then the first full operating month after that, distributions will begin. So we want to, we think everybody likes a monthly check coming to mailbox money. So that's, I think it's always been a popular thing with our investors. We used to do it quarterly. We've shifted over the last several years back over to monthly, and everybody seems to like it. And again, it takes risk off the table every month, right? You get some of your money back, and it's another way to mitigate risk going forward.
Yeah, no doubt. And especially in today's day and age, there's uncertainty out there, as we all know. So, like you said, getting that mailbox money or that check every month, that's going to be an important decision maker for investors. I think that's great.
Absolutely.
So, and Richard, I know that you have a lot to do with this. Can you tell me a little bit about what type of reporting the investors can assume they're going to see?
Absolutely, Frank. So we believe it's very important to make sure that we communicate and share information with their investors. So we we do that now on all of our other properties, and we continue that. We'll continue that as we carry forward with the fund, and it'll be a summary of the performance across the 3 to 4 multiple assets as over time. And what we do is, first of all, we write a monthly newsletter, give some updates and operational insight into how that property is running. That's published monthly. Then we also quarterly will release not only the quarterly update, but also the financials and the rent roll, so that the investors can really, again, feel like they're part of the understanding how the property is performing, et cetera, and look at the numbers, that type of thing. We also do a quarterly webinar where we present essentially a summary of the past quarter's activity across a number of different metrics. And then we invite investors to join that session and ask any questions on via chat if they would like, that type of thing. Finally, obviously, on an annual basis, the investor would receive their K-1 and things like that to make sure they can file their taxes. And again, transparency is very important to us, and we really try to make sure we do a really good job of communicating with our investors and providing the reporting that helps them understand how those assets are performing. And of course, obviously, any time an investor has a question, they are more than welcome to reach out to any one of the three of us. They'll have all of our numbers, of course, Bill's and mine and yours, Frank. We're happy to chat with any questions and any support that's needed along the way. Again, we believe in transparency, and certainly we're there to support the investor as they have needs over time. For example, maybe a bank account has to change, or something like that, or an email address. So again, we want to make sure we take care of that investor and provide that service to get those things addressed right away. So that's what we're about.
That's great. Obviously, you and I and Bill have talked a lot about transparency and how important that is. And the fund structure, basically, that's what it provides. That's one of its biggest benefits in next to risk mitigation. So that's great to know that you're going to continue the transparency you guys already have created in Park Capital Partners. And
right.
I think that's important. So as we're on the line of transparency to investors and taking kind of the role of the investor to look at that, tell us a little bit about who can participate in this fund.
Yeah, the fund's open to accredited investors. We're going to run this under SEC subpart Reg D, and it'll be 506C as in Charlie. So that'll be all accredited investors will have the opportunity to participate.
That's great. Excellent. And so very similar to your one-off single property acquisitions that you did, but same kind of investor base. But I think what they're probably all wondering is, so what's in it for the investor, right? What are the rewards for them trusting us with their investment dollars?
Absolutely. We've tried to come up, our capital partners, a 2-tiered system so we can kind of match what everybody's looking for, hopefully have a little bit for everybody. So we have our Class A shares, which will pay a 9% current pay pref. So they sit on top of the senior debt, highest in the capital stack, and they're paid first. So there's more security in that, and there's a higher cash flow of 9% annually paid on that, paid monthly. And then the B shares will pay 7%, and then they participate in cash flow splits above that pref, and then generous splits on the waterfall on the back end as well. So we can blend. If people are looking for higher current cash flow, they can do the A share and higher certainty, because again, they said higher in the stack, or they can go for more upside and have still a higher current pay at 7%, but they participate in the over 7% pay during the cash flow hold period, and then also on the disposition side of it. And they can blend them too. So if somebody's looking to do some, they could do 25% A, 75% B. There's optionality there to customize it as much as you want.
Well, that's great. That's a unique kind of offering that you don't see in the marketplace very often. So congratulations on giving those people choices. We talk about it all the time at Park Capital Partners about giving, investors choices. And we continue to do that. So I think that's great. So I guess one of the questions we're also going to want to know is the fund open now, and can they invest right now?
Yes. When this airs next week, the fund will be fully open and ready to take investors. Absolutely. Excited about the launch of that, and it's good things coming.
Yeah, exciting. So part of it, obviously, launching the fund and giving these investors the opportunity to become part of this, they're also going to want to know what are the underlying assets that make up the fund. Have you guys identified the 3 to 4 assets? I'm sure you guys can't, you don't just bunch them up all into one, 4 assets in 1 month. Can you tell us a little bit about that?
Yeah, absolutely, Frank. And that's correct. It won't be one large portfolio purchase at the onset of it. We'll buy those in as we go, as we find the right opportunities for the fund. But we have several. We've are investing final now and underwriting. We constantly have offers out, constantly touring properties, finding the one that makes the most sense for our fund and the investors. So we anticipate that'll be soon, but we can't quite share it yet until we have the purchase sale agreement signed. But we will definitely be actively pursuing assets for this fund that match and align with our investors' expectations.
That's great. So oftentimes, it's been my experience to know that investors get involved in a fund like Park Capital Partners Fund, and they are comparing it to other funds they might be involved in, and maybe they want to shift money and they decide, well, I've already invested in Park Capital's fund, but I'd like to do it, either increase that or do it again, come up with another investment. Are they able to do that with this fund structure?
Yes, absolutely. Yep, they can invest, on a per deal basis as we layer more. They can invest any time in between deals. That's the beauty of the fund structure. You don't have to time it perfectly with a raise. If some equity comes in, liquidity event comes in, and they have money to redeploy, and they like what they've seen so far, they're willing to put more in on the same fund. That's correct.
So also, I think on everybody's mind is, and through many of the podcasts that you guys have put out there with the different interviews, you guys have talked about the economy and the uncertainty, the volatility. There's a lot of different ways to invest out there, and investors are never been more educated than they are now. So I guess the question they're probably wondering about is, why now? Why is, with all the different things that some might find to be, a little bit giving them pause, why now is the right time to invest in a fund like this?
Right. A great question, Frank. And it goes back to what we see as the economic backdrop, right? We see there's definitely been inflation, right? It's ticking up. It doesn't seem as transitory as sometimes mentioned. And there's going to be interest rate increases too. So we definitely think it positions us to, you're going to want to hold hard assets, right? Things will go up in index and value. They'll rise with inflation. And that's going to be, cash flowing businesses. And basically that's what apartments are. They are a business. They're a cash flowing business. We just buy them in chunks of units, and they're stabilized from day one. Like, so we take a lot of risk off the table. We believe by doing the value add strategy is, it's already 90+% occupied when we buy it. It's already meeting all its debt service coverage ratios as far as the income to loan ratio. So it's a good asset to begin with. We're just improving it to make it better, to increase the cash flow and increase the returns. If any time during the market has a pullback, we can quit doing renovations for a little bit, cash flow through that period, hold a large capital reserve we have set aside for the CapEx projects anyhow. And then when it picks back up, start doing renovations and enjoy the upside that way too. So there's a lot of reasons and ways levers we can pull to kind of mitigate risk on that. And also, again, the diversity of the portfolio, the very nature of the fund is what makes it attractive. That, if Charlotte, say, had a localized like pullback, but Atlanta was doing great, or vice versa, or Raleigh, Durham, Orlando, you have geographic diversity also baked into the project.
Yeah, I think that's a great point. Being nimble in any investment and being able to take different tracks as the market presents itself is important. So it's great that you guys have thought about that and included that in there. So I know we probably talked about a lot of things. We've really got a good kind of 30,000 foot view again of what you guys are trying to accomplish with the fund, why you're offering it, who you're offering it to, what they can expect for returns and reporting. But I'm just like every other investor. I probably want to know a lot more. So how can people find out more and get into the more of the nitty gritty about the fund and about the different structure of it?
Yeah, absolutely. We're always welcome calls, emails. We're glad to talk to anybody. But number one, Frank, would be to get a hold of our Director of Investor Relations, Frank. And that's Frank at parkcapitalpartnersllc.com. Or feel free to contact Richard or myself at Bill at parkcapitalpartnersllc.com or Richard at parkcapitalpartnersllc.com. Also our website, www.parkcapitalpartnersllc.com. Find out more, and also links to all our contact information on there as well.
Yeah, no shortage of ways to find out more, that's for sure. And I think I speak for all three of us when I say that we are available 24/7 to take calls. We always like to talk to the investors, always like to talk about what we're doing and how we're doing it. So please, if you are interested, don't ever hesitate to give us a shout, email, or text, or whatever is convenient for you. So I guess I just want to say at this point, thank you all for listening to us. Bill, Richard, thank you again for allowing me to steer the ship today, and you guys acting as guests. It's kind of a neat little switch, and I'm sure everybody really appreciates all the information we brought to them today. So thank you very much for letting me be part of it.
Absolutely. Thanks, Frank. We really appreciate it.
Yes, thank you, Frank. Appreciate you hosting. And we certainly want to thank our listeners out there. We appreciate you listening, tuning in. Please help us. Please give us a 5-star rating so we can continue bringing you more great content. Please reach out to find out more about the Park Capital Value Add Fund. Happy to speak with you on that further. And remember, folks, the road less traveled may be calling you. We recommend that you listen and take action. Thanks for joining.